If I could restart my investment journey with just $1,000, I'd do things a whole lot differently. See, when you're just starting out, the biggest mistake you can make is focusing on how much money you have. You think $1,000 isn't enough to make a difference? You're wrong. It's not about the money, it's about the mindset, the discipline, the patience, and most importantly, it's about the decisions you make with that money. Let me tell you something that most people get wrong. They think investing is about picking the right stock, catching the next big thing, timing the market perfectly, but that's not how the greatest investors, like Warren Buffett, play the game. They don't gamble. They don't chase hype. They focus on principles, not predictions. So if I were starting over with just $1,000, here's exactly what I'd do. First, I'd educate myself. Not by reading headlines, not by listening to random advice from social media, but by studying timeless principles. Buffett himself says, "The more you learn, the more you earn." And he's right. The reason most people lose money isn't because of bad investments. It's because they don't understand what they're doing. They follow the crowd. They react emotionally. They invest in things they don't truly believe in. I'd pick up books like The Intelligent Investor by Benjamin Graham. I'd study how businesses work, how money flows, and how real wealth is built. Because without knowledge, even $1 million can be lost overnight. But with the right knowledge, even $1,000 can become a fortune over time. Now, once I've educated myself, I'd shift my focus to the most important thing: building strong habits. You see, the hardest part about investing isn't making money. It's sticking to a strategy when things get tough. The stock market doesn't move in a straight line. It goes up, it goes down, and sometimes it crashes. The average person panics. They sell when prices drop and buy when things look good again. That's the opposite of what you should do. Buffett says, "Be fearful when others are greedy, and be greedy when others are fearful." So with my $1,000, I wouldn't try to time the market. I wouldn't gamble it on a hot stock. Instead, I'd take a long-term approach. I'd invest in something stable, something proven, something that compounds over time. And the best way to do that? Index funds. An index fund is a collection of the biggest companies in the stock market. Instead of betting on one company, you're betting on the entire economy. Historically, the S&P 500, one of the most popular index funds, has returned around 10% per year on average. That might not sound like much, but here's where the magic happens. It's called compounding. Einstein called it the eighth wonder of the world for a reason. If I put my $1,000 into an S&P 500 index fund and never touched it, in 30 years, assuming that 10% average return, it would grow to over $17,000. And if I kept adding just $100 per month, that would turn into over $200,000. That's the power of patience. That's the power of discipline. But I wouldn't stop there. Investing isn't just about stocks. It's about investing in yourself. Buffett says, "The best investment you can make is in yourself." So I'd take a portion of that $1,000 and use it to learn new skills. Maybe it's a course on business. Maybe it's learning how to build an online brand. Maybe it's improving my ability to communicate and sell ideas. Because here's the truth: the more valuable you become, the more money you attract. Another thing I'd do? I'd build multiple streams of income. Too many people rely on just one paycheck. That's risky. What happens if that job disappears? I'd use my investment money as a foundation, but I'd also focus on increasing my earning potential. Maybe it's starting a side hustle, maybe it's freelancing, maybe it's launching a small online business. The goal isn't just to save money, it's to multiply it. And here's something critical that most people overlook. managing risk. You see, a lot of people get excited about investing, but they forget about the other side, protecting their wealth. That means having an emergency fund. That means avoiding debt that drags you down. That means not putting all your eggs in one basket. I wouldn't take my entire $1,000 and throw it all into the market at once. I'd start small, maybe $100 or $200 at a time. I'd invest consistently, month after month, no matter what the market is doing. Because here's what happens when you do that. You remove emotions from the equation. You stop worrying about timing. You stop reacting to the news. You just focus on building, little by little, until one day you look back and realize just how far you've come. Buffett didn't get rich overnight. He started young. He stayed disciplined. He understood that investing isn't about making quick money. It's about making smart decisions over and over again. So if I were starting over, I wouldn't worry about how little I had. I'd focus on what I could control: my knowledge, my habits, my discipline, my ability to think long-term when everyone else is thinking short-term. And here's the thing: you don't need a lot of money to become wealthy. You just need time and consistency. Small amounts, invested wisely, grow into something massive. But only if you stay the course. Most people won't do this. They'll get impatient. They'll chase trends. They'll quit when things get hard. But that's why most people never build real wealth. The ones who do, they understand that success isn't about luck. It's about making the right moves, day after day, year after year. If I could restart my investment journey, I'd do it the right way. No gambling, no shortcuts, just discipline, patience, and smart decisions. That's how you turn $1,000 into something life-changing. And the best time to start? Right now.